Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the NASDAQ 100 for Thursday, September the 5th, 2024. I'm going to be starting here with the S&P 500, and I'm starting on the 4-hour chart. And the first thing you're likely going to notice is that I have switched the labeling to suggest and indicate that the market is still in the process of putting in the C wave down to complete the minor fourth wave. So I'm making that switch on the premise that as we came in today, the market I had discussed yesterday basically had pretty much closed right about that 5,500 area, or they touched it during the day, rose back up to give it enough room. And then what we saw today was the market break below 5511 in the S&P in the futures market, 5,500 in the SPX. Now, as I've come to find out, that was an important level because there was a put wall there, and what the put wall is suggesting that it should have been support, and it should have been strong support, and it was for a while. The market would come down, give it a look, go back up. Market would come down, give it a look, go up even harder. And then even as we saw today, that the market broke that level. So we got maybe a little touch of what was going to be forced. And that would be adjusting positions. And because there was such a layer of support there that the market started to make the adjustments. But then I guess before it really could get going, they pushed it back up. And in fact, they actually then ran it from that level. They ran it back up to like 29 or 30, 55, 29 or 30 here in the futures market. But the fact that it got broken, the fact that we're now back, and basically the cash market has basically, let me just move this over so I can kind of do both here. The cash market in the SPX closed at 5503. Then we got news from CRM, the sales force, they're buying a company, and we all know what that kind of does. And then we also got Broadcom's earnings, and we all know what that could do. In fact, the stock is down $10 from the close. So, with that and the fact that we already went through it, begins to suggest that the market is getting ready to shift into a negative gamma atmosphere. In fact, checking with some different sources, that below 5,500 actually starts to signal a negative gamma atmosphere. And what that also means is that, as we have been discussing, I'm going to open it. Oh, come on. I tell you, when I get through this stuff, sometimes it just is like never ends. And it's just the way that the mouse and everything else goes. But anyway, that this was dropping into negative gamma. And the result was harder fall, just kind of taking a nosedive. And so we had support here. So don't get me wrong. We had fib support here. And it also continues to have fib support there. And even though we could go ABC, that left open. It could have been done. The minor four could have been done. And that's the way I showed that count for quite some time, because this was a strong rally. And we went from negative gamma atmosphere back over to positive gamma atmosphere relatively quickly. And so that threw us all this, putting risk on trade, the risk on. Well, yesterday, when we were really declining rather hard, really started to put into place the possibility that the negative gamma atmosphere was going to drop into place. Now, we spent yesterday basically in what I would consider just, well, here's I've labeled it, a wave 2 correction. And previously, it would have been part of a fourth wave, like the minute fourth wave. And I'm moving away from that for a couple of reasons, because I think it's now too big in relationship, and the fact that we did break 5,500 today. Yes, it was retaken, but there were points in here they did the same thing and then just got overwhelmed, just overwhelmed. In other words, somebody with the bigger position came in and like, no, we're adjusting, we're getting out. So I will be interesting to see. I don't have the data yet on, putting into all of today's trade to see how that's going to affect this level and did that level shift. So, but for right now, the premise is that below 5,500, it shifts the atmosphere. It shifts the gamma from negative to from positive to negative. And that would suggest that we just start, the selling will begin. And being that it was a large level, there was a large amount of gamma sitting at 5,500. I don't think all of it's been relieved just yet. I think some started because we dropped down, and it was 55.11 here in the futures market, 5,500 in there. We got down to a low at 54.90, which is not all that much low from 5,500. So again, and then in that process, they managed to close it back above, just on that particular bar, which is a 4-hour bar. They managed to close it just above. Now I'm going to come down to the hourly chart and take a look at this again. So this one actually, see, I keep it because we have the charts moving all over the place. And this 2 actually is going to go over here. And when I go back to the other chart, it's not going to look right. So we got down to actually a little bit lower. Yeah. Let me see what this one is. That got 54.90, but then you see that same bar, we got it back above 5,500. And then we rallied all the way back up. Now, how much that relieved pressure? Because even on this bar, they held it higher. Then the next bar, they went down and they tested 5,500 on the nose, and it held. And then they ended up closing it at 55.11, getting it back higher initially, and then bringing it back in. Now, again, not knowing how all the trade is being worked out down here, how much of that gamma is being released via a switch in the position, or adjusting in the position, or just getting out of the position. But my thought is that there's enough there that if we go down again, it could really start that kind of that avalanche type where we just kind of build and we're building and we're building and the selling just kind of gets pushed in. Now, the difference in all of this is that really between 5,500 and 5,600, the market was pretty neutral. They could swing back and forth, and we had these wonderful upswings. We had the downswings, and everybody was trading in between, and again, in all of the underlying, et cetera. But now we're beginning to see a little bit of a breakdown in AI, in the chips and the semiconductors. And we continue to look at the SMH and feel that that had more downside to do. Now, couple that up with Broadcom's earnings this afternoon, I think that's going to be enough to kind of tip it a little bit and start to, I don't want to use the word watershed type or waterfall type, but when we have to compare it to what we had before at the beginning, what drove us down to that August low, the August 5th low, was pretty much a negative gamma. Now, here we are in the hourly chart, and you can see, yes, there were plenty of attempts to purchase it, but every time they did, you saw what they did, the reaction, down, down, up, down. And this, they finally, the buyers started to get control, but there was still a lot of heavy duty selling. So it wasn't until 2 days after we broke that it started to build, and then we could get it above a level that brought us back towards that positive gamma atmosphere. Now, I know this is all very foreign to many of you, but the basic understanding of what I'm trying to tell you is that everything combined suggests that the market is ready. The market may not want to, but it would just appear that the market is ready to kind of drop. Now, as it stands right now, with the break below 55.11 in the futures market here, it kind of shoved things down quite a bit to where our next levels are like 54.60. And then below that, it's 54.10. So, and I know some of that will likely get filled in now, but once we start to break, if we do break below 5,400, it opens that window again for a much stronger drop because we don't have anything yet. I imagine there will be some fill in, like if we drop below 5,400, which is what we're right there, we have a lot that'll be filling in all of this area. In terms of just where gamma, where positions are sitting, where things are lining up and what it's pointing towards. But on an Elliott basis now, if I'm considering that we have A, B, and we're just in the beginning of the C wave, I'm labeling it 1, 2, 1 of C, 2 of C. Remember, minute degree. 1 of C, 2 of C. And we're starting to come down in a third. Bring it down to a 15-minute chart. And here we have, again, 1, 2, 1, 2, 1, 2. I mean, there's a lot of 1, 2s. And if that is the count, then we should really start right pretty much within the next 8 minutes. So again, how things trade now are going to get real interesting. Because to me, it stops having any relevance to, well, are we talking about interest rates? Are we talking about the possibility that interest rates will remain unchanged? That's the third option that they got, right? First one is they're going to drop it a quarter. Second one is possibly 50 basis points. Now that one. But the third is they don't do anything. They leave it unchanged yet again. Why? Well, because, consumer seems to be a little bit still robust and okay with interest rates. We're still conducting a lot of business. So they're still spending a lot of money. So again, what do we need to see that's going to prevent this market from getting its rate cut that it wants so badly? Because the other side of the coin, folks, is that everyone wants to assume this posture that rate cuts are bullish for the market. And in this particular case, we need to be careful because it likely is not. And so I'm going to go back to how I'm counting this. What would have to save this, right, is that we don't go down. That we come in and we start to rally and we rally back above the 15-minute 200. We rally back above this high at 55.58. So we get above 55.60. And then we get above this high, which is 64 or 63. That's also 60.61. So we get above all these levels and we do not look back. Now that should it occur, would again bring us back to the other one where it was 1, 2, 3, and this was a 4. We came down to support, by the way, and that support was 54.88, and this low was 54.90. So we came down to it, and we rallied up off of it, even though we had broken a level that should not have been, well, always could be broken, but has a higher consequence based on positions, based on the options flow. So again, now just to review tomorrow, what we have coming out tomorrow are U.S. employment. Big report. So it's going to be interesting. That's kind of what I got to say. It's going to be interesting. We have the employment report. We have the unemployment rate. We have the hourly wages. We have the hourly wages year over year. And if they're continuing to increase, then that's good for the people, but not so great for inflation. And that's really the only thing that we got. And that's all coming out prior to the market opening. So we'll have an idea like how the market's going to react to this. And then tomorrow's also an options expiration. So there's a lot of reasons for the volatility to pop and to keep and to pick up some speed again. So what I want to do now is start to fill in some of the blanks that we have in terms of where are all the fibs, Michael? So let's add these fibs back in and see what we got going on. First one I'm going to add in is this actually went down there, but I'm not wondering what happened to the fibs. So let me just see what this is connecting 21 to 5120. There's 5120 and there's 57. Okay, so it was just putting in support lines. So I am going to, oh, and they were to the upper one. Okay, I get it. So I'm going to take that off because it was for the irregular readings that I had up there a while back, and I just forgot to remove those. So what we're going to put on is we're going to go from there. All right, so put this on, and we're going to go here, and I'm going to come down to here, and I'm going to bring it up to here. So here are our settings are given for the C wave. So C will be equal to A, most common, at 50, 72, 75. We're sitting at 55.11, close to 500 points. So that's a lot. And we're believing that it could very much resemble this. And basically, look at where. It's kind of starting almost in the same place. That low was 51.21. This low, we would be looking for it to go a little bit further, right? From there to that high. This is 57.21. This is 56.67. So we have, so we say 70, 30. We have about 50 points. So what do we have below 21 or down at the bottom? 51.21, I believe it was. 50. What is the low? I go right to it. There you go. 51.20 is that low. Minus 50, 50.72. So that's where they would be equal, and we're getting right down there. And that level, while it is below there, it fits. And it's still within this. So it fits even cleaner because we got closer to its terminus, which was that spike low that we had back in April down to, on a futures basis, down to 50.27, I thought it said. Come on, give me that level. I just saw it. It's 50.27. There. 50.27, almost 50.28. So that's the picture. If indeed, then we're going to put a minor 4 here. And the good news is that if you're a bull, the good news is that we start to rally again. So while many people are going to continue to talk, oh no, we're crashing. Oh, this is all, we're going to drop into recession. That also is a possibility. And we just get a much larger move down. Let's not forget, this third wave that we're correcting was pretty dang big. So if we had to really look, I can run it from here, and let's just run straight fibs, retracements. 50% is all the way down here, 47.80. That would just put the minor fourth wave in a 50%, right? And the one that can't cross is all the way down here, 42. So yes, there is plenty of room. In fact, 5,000 remains 3.382. 5,000 remains, and trust me, still major long-term support, major, because this is April. So it's been in place since we rallied up out of that. So it is going to be pretty strong. And if it gets broken, then all hell is going to break loose. Still. Now, I am not saying, now, please don't misunderstand what I'm talking about here. I am not saying that's what the market's going to do, and I'm not saying that, gee, it's going to go down there and we're just going to have another explosion to the downside. I'm saying if it should take out that 5,000 level where there should be major support, then yes, it'll trigger a lot of selling. And very much could drive it down to 47.80, which is just still a minor 4 with another rally to come. So that could be our September, and it also could take us all the way into October. Well, what do we know? So back over here. So I am kind of thinking that we got a 1-2 and we're going to start to drop. And that's kind of what I'd be looking for. And we just reopened and they're up 50 cents. Woohoo! While the NASDAQ is dropping. And speaking of the NASDAQ, let me just go over a few more things here and then we're going to flip over and we're going to take a look at the NASDAQ. So let's go over and look at these moving averages. What are they finally doing? They're still hanging out. They're still hanging in. Now, here we are. So we did come down and we broke the 50. We got back above the 50. And now look where it's trading. Right at the 50. The daily 50 moving average is as flat as a pancake. So it continues to provide support. And that's back at the 55.11 area basis, the future. All right, so if I go right over here, you see what it is? 55.11.94. That's where it's sitting. Right where the support is. So again, here we are. And now we're getting ready to maybe go down through it. If that starts and we start to go just because of the force of the market and we go back below 5,500, same story. Okay. So moving averages, they're really, the 20 and the 13, they both turned lower. But let's see how they do if they get down to here. All right, let's go over and take a look at the NASDAQ. NASDAQ, boy, I tell you, disjointed within the NASDAQ. And what I mean by that, you had Tesla just not giving up the buys, not giving them up today. Push, 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 run it up, run it up, run it up. Had to have 230. That strike, the 230 strike became extremely important today and very heavily traded. So what does all that mean? Well, it just kind of means that's the way the options were trading, and it just really sets things up pretty well. Now we closed at 230, and now we're just kind of bid offer just below it. We're not really collapsing in terms of Tesla. So that's what's holding up. Apple had a pretty decent day coming down now. And this is also one that started to move lower and then finally caught fire and they just pushed it and they went through the roof. So we had Apple and actually it was the Mag 7. I think that's really what came in today. Somebody stepped in and they were buying pretty much the Mag 7. That helped the NASDAQ. That kept the NASDAQ from dropping out of the sky. And very volatile. Very, very volatile. I'm going to bring it off. So let's look at the moving averages while we're here. You can see there's the 50, the 20, and the 13 broke below the 50. And when it happened, that's the break. And we saw some acceleration, but it kind of rode right on top of it. Now we got it today. And again, we saw a little bit of acceleration down and a little bit of acceleration down. This is the daily. That was today. So, but the 200 is pretty flat and it's sitting right below at 18,582. And so I'm thinking that's still going to be support right now. But if it breaks now, we're starting to head down here. So I'm still hanging in with this, that this is A, this is B, and we're coming down in a C wave when we got 1, 2, 1, 2. Now, I remember yesterday that I on last night's update, I had 1, 2, and a 3, and this could have been a 4. I took that all back. And because I agree with, I think it was Paul, subscriber, who basically brought it up and said, nah, you might want to look at that. And I did. And I said, thank you, Paul, for bringing that to my attention. And so I believe it was 1, 2, and then a 1, 2, 3, 4, 5 coming into here. And this puts a 1 here, ABC 2. Now we're dropping. What does that look like? Well, it was fussy today, but so here we are this morning, and then we open, and they initially, it's like they were dealing with the employment numbers, the jobs data, and it was like, okay, yes, no, but then when they opened, they ran it, and they got it all the way up to 19,150. And I had a lot of resistance levels in here that I thought should hold. if it was going to go down first, right? So in other words, if this was coming in on a 4 and we're going to go down, and we needed to complete this initial first 5 down, but it didn't. It kind of went up, came down on the data, and then they rallied it, and then they rallied it, and then it sank again. So, and that's a lot of options flow. That's a lot of just going in and shifting levels. So that's the other thing that we really need to pay attention to, because I'll talk about 5,500, say, for example, in the NASDAQ. And I think that's like, you got to look at, well, what does that look like for the NQ? Well, what kind of happened today, yesterday's trade really started to shift around the levels. So there was a lot of positioning going on yesterday, and I saw where like the put wall dropped. Okay, so the put wall right now in the NQ sitting somewhere around probably 18,633, somewhere in that area. That's pretty far down. But I think that we can go down there pretty quickly, to be honest with you. So we're going to hang and we're going to see what happens, because coming down, I'm going to bring it down to the 15-minute, because once again, 1 2 1 2. And then what does this look like? Well, that's where it starts to get a little sticky. We're going to come down to the 15-minute. So we got, what do we got? 1 2 1 2 1 2. You see, this got ugly again. And that's just the way the NASDAQ was trading between the stocks that were going down and the stocks that were going to be supported and move higher. I would think that it kind of, everything gangs up. And if we're really going to start to drop, and we're going to strongly drop, well, then I think that everything kind of has to go together. We can't have like 2 holdouts within the Mag 7 that are seeing higher levels. It can happen, but then I'm going to have to be looking at, well, what exactly are we doing in terms of an Elliott count? Right now, I'm continuing to look for that we're going to pick up some speed, that a lot of these levels are going to start to break, and that we will drop. And we'll start to break down. Now, here we have a little bit more. This would be 100% for this minuet wave 3. I'm leaving it there because it continues to hold. But that's not a level that I'm expecting this third wave in any way, shape, or form to finish. In fact, I just leave it there because it's fib support. I expect it, if it gets broken, it's going to sail through it. And then what we have here is, I got to just change this color. So I'm going to get rid of that, and I'm going to start changing the color. Just put it in correctly here. And what we got. And by the way, for those of you that think that this is easy, and it's really easy to put this down there. Yep, I forgot to say okay, didn't I? Okay, go here, do it again. It is not. This market is very, very volatile. And we're seeing that a lot of times doesn't make any difference. We're taking Apple higher. We're taking Tesla higher again, like they did yesterday. So one more time, if they all go in concert together, we're going to drop, and we're going to drop quickly and severely. The Elliott wave count, or as I have it labeled right now, 1 2 1 2, suggests falling off that precipice, falling off that cliff. Now, what if it doesn't? Well, then it's still, to me, going to be inside of some type of a corrective move. This is definitely not impulsive. Now, could we say that finished something? Yeah, we could. But if that's the case, then what's that? A, B, C, or A, and this is a B, and then we're going to go back up in a C? Possibly. All of these remain possibilities. But what I want to say is that what we do when we're trading, what I do when I'm trading, is not that I toss any Elliott out the window or any fibs out the window, because I don't. But I have to trade the signals that are in front of me. What's the market doing right now in front of me? And it may not last, or it may last for the whole day, because I cannot we can't forecast to say, well, what are algorithms going to be set up to do tomorrow? Are they really going to save all this and then turn risk on again? These are all possibilities. I won't know until we see it. So what we're giving is the best estimate on what, with the data that I have, what does it look like? Looks like we should drop, and it looks like we may drop with some force. And as you can see, we are beginning to now. And why? Well, they're knocking Broadcom lower. They're beginning to quote some of these other stocks lower. Now we get Microsoft going lower. They're going to hang on to Meta. The ones that they decide they're going to hang on to are kind of like, okay, for whatever the reason is. But I believe that in concert we'll be dropping. And if that happens, we're going to drop through 18,767. We'll likely drop through 18,600, 18,600, and we will start heading down to these lower levels. And that may just be, well, this third, I'm thinking is going to end up down here. So look at what we're doing. If we get a powerhouse sell going tomorrow and it carries over into Monday, we could be down here, which, by the way, puts us right back in the area of where this all needs to be, right? 17,780, 17,746. And what are we looking for? 17,335 to 16,078. And here is ultimate. This is the C wave, 100%. C would be equal to wave A at 16,392. I showed you this yesterday. And here we have the 50% retracement for the minor 4, 16,389. That's a pretty good decline from 19,000 or 18,900, isn't it? That's a very good job. And because we'll be dropping in a third, in a 3 of a 3, could go pretty quick down to here. We get a rally, a little one, right? A 4, and we come back down. This is the 3. We come back down. 4, and we come back down in a 5. I'm just suggesting, I'm not by any means saying that I have a crystal ball that tells me that's what's going to happen. But I'm looking for 5 on a minuet degree, a minuet degree, and 5 on a subminuet degree, of which I have only 1 and 2. I need both. So I'm looking for a little bit of speed as we get into that 3 of 3. And what I mean is 3 of 3. And we start hightailing out of all of this. And that will entail breaking levels of support, breaking levels that shift gamma into action. Well, let me just say, shifts gamma into actionable trades, which in this case, because we're breaking them to the downside, it forces adjustment via selling, the selling of equities. So again, when we shift from a positive to a negative gamma atmosphere, it shifts the process into the selling of equities, the selling of the underlying, the selling of the indexes, the selling of the ETFs, etc. It's broadband, right? It really strings and threads all the way through the market. All right. So again, tomorrow, big day due to the employment data that will come out 8:30 a.m. And after that, just a couple of Fed people out talking. So everything's really going to sit with that and the fact that it's expiration. Let's see what happens. If they love the employment numbers, now this is going to be interesting. If they love the employment numbers, then I cannot take away the potential. But once again, that this is only a minute 4, and we're going to rise up in a minute wave 5 to complete a minor 5th wave, right? Now that's back to that other. They are still running side by side, whether I'm including it just here, that both markets now I've got set up as if we're going to go down. If they come in and they love that employment data tomorrow, and they love the fact that what's ever going on is just going to continue, and Apple gets marked up and all the rest of this starts to happen with expiration, well, and we get a good enough shove back up, but we need to get back above 20,000, and we need to do it pretty dang quick if the market's intent is to put in this last leg up of a minute in the form of a minute wave 5 to complete a minor wave 5. And that would be the other way around, that this was 4 and this is 1, 2, 3. This is 4. It's big, which is really working against it right now. So if it's going to show that it's got the power to halt right there and to turn, same with the S&P, same as with here. If that's what's going to happen, it needs to do it. It needs to do it fast. That's where I'm going to leave that. Okay, that's going to be it for today. Now, the next Elliott Wave Daily update will be on Monday, September the 9th. And over the weekend, I hope that I will be getting out a weekly update for these markets. Have a great trading day tomorrow and have a great weekend.